What is cryptocurrency? Welcome to the Crypto Quest. Cryptocurrencies are digital or virtual currencies that are protected by encryption, making counterfeiting or double spending practically impossible. Blockchain technology, a distributed ledger governed by a dispersed network of computers, is used by the majority of cryptocurrencies to operate on decentralized networks. The fact that cryptocurrencies are typically not issued by a single entity makes them, in theory, impervious to manipulation or intervention by the government. Comprehending cryptocurrency. Digital or virtual currency supported by cryptography technologies are known as cryptocurrencies. They make it possible to make safe internet payments without using middlemen. Crypto refers to the different cryptographic methods and encryption algorithms that protect these entries, including hashing functions, public-private key pairs, and elliptical curve encryption. Blockchain technology is essential to the functionality and allure of cryptocurrencies like Bitcoin. A blockchain is just a collection of linked data blocks on an online ledger, as the name suggests. A collection of transactions that have been independently confirmed by every network validator is contained in each block. Forging transaction histories is nearly impossible because each newly created block must be validated before being confirmed. A network of distinct nodes or computers that manage the ledger must concur on the contents of the online ledger. Blockchain technology, according to experts, can benefit a variety of supply networks, sectors, and procedures, including online voting and crowdfunding. Blockchain technology is being used by financial organizations like J.P. Morgan Chase and Company to streamline payment processing and reduce transaction costs. Cryptocurrency types. A lot of cryptocurrencies were developed to make work on the blockchain they are based on easier. Ethereum's Ether, for instance, was intended to be used as payment for opening blocks and validating transactions. Ether took on an extra role as the blockchain staking mechanism when it switched to proof of stake in September 2022. Financial institutions can use XRP, developed by the XRP Ledger Foundation, to make cross-border payments easier. Understanding the different kinds of cryptocurrencies is crucial because there are so many of them available. You can determine whether a cryptocurrency is worth investing in by knowing if it has a purpose. A cryptocurrency that has a purpose is probably less hazardous than one that doesn't. When you hear about different sorts of cryptocurrencies, you usually hear the name of the coin. Coin types, however, are not the same as coin names. The sorts of tokens in that category include the following, along with some of their names. Utility. Two instances of utility tokens are ETH and XRP. On their blockchains, they fulfill particular purposes. Transactional. Tokens intended for use as a kind of payment. The most well-known of these is Bitcoin. Governance. On a blockchain, such as Uniswap, these tokens stand in for voting or other rights. Platform. These currencies facilitate blockchain-based applications like Solana. Tokens for security. Tokens that signify possession of an item, such as tokenized stock, value moved to the blockchain. One type of securitized token is the MS token. You can purchase a portion of the Millennium Sapphire if you can locate one for sale. You've discovered a new category or something that requires further research to ensure its legitimacy if you come across a cryptocurrency that doesn't fit into any of these categories. How cryptocurrency can be purchased. You must go to a cryptocurrency exchange if you wish to utilize cryptocurrencies to purchase goods and services. Similar to stocks, these companies let you buy or sell cryptocurrencies from other users at the going rate. You must either move the coins to a digital wallet or store them with a third-party service like Coinbase after purchasing them. You might be able to purchase cryptocurrencies through your brokerage if that's all you want to do as an investment. For instance, Robinhood lets users invest in Bitcoin and other cryptocurrencies, but you can't take them out to buy anything on the platform. Furthermore, several cryptocurrency exchange-traded funds offer exposure to the cryptocurrency asset class without requiring investors to keep their wallets. For example, investors may decide to hold shares in Bitcoin futures ETFs as of May 2024. The listing and trading of Ether spot shares has also received approval from the SEC. Is it legal to use cryptocurrency? The government or monetary authorities are the source of authority for fiat currencies. As the official currency of the United States, the US dollar is issued by the government and is considered legal tender. Within the United States, the legal status of cryptocurrencies affects how they are used in trading and day-to-day transactions. The Financial Action Task Force suggested in June 2019 that cryptocurrency wire transactions be governed by its travel rule, which mandates AML compliance. The Internal Revenue Service views cryptocurrencies as financial assets or property for tax purposes, even though they are regarded as a type of money. Additionally, the government wants a cut of any capital gains from trading or selling cryptocurrencies, just like it does with most other investments. Depending on how long the individual owned the cryptocurrency and how they utilized it, the IRS will tax digital assets differently, either as ordinary income or as capital gains. In July 2023, judges in the United States decided that cryptocurrencies are securities if they are bought by institutional buyers, but not by individual investors who buy them on exchanges. Crypto enthusiasts hailed it as a victory for the industry, but the SEC regulates cryptocurrency exchanges, coin launches, and sales to institutional investors. Although cryptocurrency is legal in the United States, regulatory bodies are gradually catching up with the sector. The only nation that accepts Bitcoin as legal money for financial transactions as of June 2024 is El Salvador. Jurisdictions around the world have different laws governing cryptocurrencies. Bitcoin is considered legal property in Asia according to Japan's Payment Services Act. It is mandatory for cryptocurrency exchanges that operate within the nation to gather customer information and wire transfer details. China has a central bank digital currency, but has outlawed cryptocurrency mining, transfers, and exchanges within its boundaries. Although India is reportedly developing a framework for cryptocurrencies, they are not yet prohibited until they are implemented. Cryptocurrencies are freely offered by exchanges. In Europe, the European Union has legalized cryptocurrencies. Cryptocurrency derivatives and such products must be considered financial instruments. The European Commission's Markets in Crypto Assets rule became operative in June 2023. This regulation creates guidelines and protections for businesses or suppliers who use cryptocurrency to offer financial services. Is investing in cryptocurrency safe? Due to large investor losses from frauds, hacks, bugs, and volatility, cryptocurrencies have gained a reputation as risky investments. Despite the general security of the blockchain and underlying cryptography, novice users may be seriously put at risk by the technical intricacy of utilizing and maintaining crypto assets. Bitcoin investors should be mindful of the following risks in addition to the market risks connected to speculative assets. User risk. Once a Bitcoin transaction has been sent, it cannot be canceled or reversed, unlike traditional finance. According to some estimates, 1/5 of all Bitcoins are currently inaccessible because of erroneous sending addresses or forgotten passwords. Risks related to regulations. In many jurisdictions, it is currently unclear whether cryptocurrencies are subject to securities, currency, or both regulations. An abrupt crackdown by regulators may make it difficult to sell cryptocurrencies or result in a decline in their value across the board. Counterparty risks. A lot of traders and investors keep their cryptocurrencies in exchanges or other custodians. One could lose all of their money if one of these third parties stole it or suffered a loss. Management risks. There aren't many safeguards against dishonest or immoral management practices because there aren't any clear regulations. A lot of investors have lost a lot of money because management teams didn't produce a product. The bottom line. Cryptocurrencies are digital assets that are secured by cryptography. As a relatively new technology, they are highly speculative, and it is important to understand the risks involved before investing. If you enjoyed this video, don't forget to like, subscribe, and comment below. Let us know your thoughts and stay tuned for more shocking content.